Good afternoon, everyone. Dear Arizona State University members, my dear respected Coursera peers, as well as board members in terms of this assignment. I'm going to share the financial analysis of a private company here, which I would like to use its name, and it's actually taken from the internal resources that you can see the source at the below the chart. So I'm going to just tell you what kind of circumstance that our company is been going through in 2018. Let me share my presentation. So here you can see that it's 2018 to 31st of December, which is the end of financial year, and this is the chart that I have taken from the source that has been mentioned. So the key metrics here are explained in the other page, which I'm going to tell you that whatever COGS, for example, in this case means, or CGNA, or earnings before tax, which might be shortened as differently. So the most important thing here is that you have to pay attention to in millions. Okay, this means, for example, $5 billion, not 5 million or $5,000. It's $5 billion. And the key metrics that we're going to have a look at here is cost of goods per which are sold. That I mean here that how much money or expenditure that is being allocated by the company, so that the cost of goods that during the sales process, how much does it cost to the company. We're going to have a look at that one. Gross profit depreciation, as well as CG&A, which means, or which stands for some general and administrative costs. And there's an interest rate, which means that approximately the majority of the companies on the worldwide, they use the banking services, which is coming accurate with interest. And earning before tax, that is the before the taxes applied to our company or to our revenue, how much money did we have, and afterwards, after taking the tax, after allotting the tax to the federal state, we're going to see the net earnings, and we're going to also investigate and pay a little bit more detailed analysis of why it is like that. So as you can see up here, we have we had $3 billion in 2016, and our revenue increased approximately $1 billion, exactly $1 billion every year since 2017. It escalated to $4 billion, and then it rose to $5 billion. And it's quite a substantial increase. And there is some metrics that we need to analyze in detail. After a while, I'm going to do. And also, we had $3,200,000,000 dollars cost of goods, and that cost us, and which made our gross profit $1,800,000,000. And we had some depreciation, which means that we had some outdated facilities, and therefore we had to take care of them, and we had a lot some finances in order to renew some of our facilities, and that cost us $500 million. And also we're going to have a look at selling, general and administrative cost, which was $300 billion in 2018, and $50 billion of interest that we had to pay out to the banks apart from the original money that we took. And there's also EBT, earning before tax. So let's have a look. So in terms of cost of goods sold, so we had special problem in terms of we had two new branches in China and Japan, and therefore selling those products and simultaneously allocating some funds to those two branches. It cost us some, let's say, $3.3 billion. $200 million were from the other sources. And in terms of depreciation, we had one company, one company building in Australia, in Sydney, and it had to be renewed, and also three cars, three automobiles, company automobiles had to be renewed in South Africa, Johannesburg, and these were the depreciation costs, which cost us $300 million. And as I said before, $50 million have been taken from our general revenue. And in terms of selling general and administrative costs, we had some employment-related costs that we had to allocate for the New Year plans, and as well as the national day and national holiday plans of the different branches internationally. So that costs a little bit of $50 million. And also there were some there are some projections that I'd like to make now about the future, that in Japan and in rural areas of Australia, there was some transport system and infrastructure problems, and we basically we couldn't do anything, because first of all, legally it's not right to make the transport system or build the infrastructure in these countries, and the country was not very passionate about building transport and infrastructure in those countries. In the areas where our company company branches are located. However, from 2019, they're going to have a kickstart to build infrastructure and transport, which is going to directly contribute towards our general revenue as well as net earnings. And also, new technology have been emerged in Switzerland, and we're about to negotiate the to buy that technology. And if we are successful, which I believe that we're going to be successful, because we have already agreed upon the price, as well as the usage areas and some technical assistance related stuff. We agreed upon all of them, and the only part that we have to go through is the signature, which is predicted to be by the next Monday. And also we'll have more opportunities in terms of local employment in international regions, especially our two new branches. And in that case, instead of sending our employees and forking out so much salary to them, we can use the local employment by taking care of our employees here by ourselves, and the local employment will not cost that much when it's compared to sending our let's say American employees to those companies. Financial market predictions for 2019, it's going to be stable, and there will be some rise, especially in the American economy. Therefore, it's not going to be a problem. Therefore, it's going to have some 1 to 2% escalation in our company as well. Also, we got to be careful with the taxation, because the taxes are increasing as our revenue or net earnings increase. And also, there's a merger case that two companies, international prestigious companies, told us that they had some willingness to join to our company. And if the merging process is established, in that case, we're going to increase our exposure as well as the net earnings and general effectiveness, and will also join to the some social environment programs that have been imposed to us by the government. And this is the end of our presentation. And if you have any question, you can email to me. Thank you for watching. I'm very glad that you listened to me, and see you next time.